Welcome, everybody, to the Chinchilla Pickin' Podcast. It is August 24th, 2021. We hope, as always, to be entertaining, educational, and uplifting because we want everyone to make money. As always, I'm here with Brandon Beaver. Brandon, how are you doing tonight, man?
I'm good. How about you?
I'm doing well. You know, I just realized I never say my name. My name is David Underwood. And
That's who you are?
Beaver. Yeah, right? Who knew, right? Every week we get together and talk. Nobody knows my name. Just yours.
That's all that matters. Tonight, just kidding. I'm just kidding. I'm good.
You do bring the magic to the show. I'll tell you that much, man. It's definitely you. You're out there on the Stock Twits for us. You know, we got to bring that segment back. You know, Stock Twits comments of the week.
I think I'm going to do it next week.
I'm going to do it too. We are both going to do it. I'm going to come up with a couple myself.
Yeah.
You know, especially with the GameStop rally right now. I mean, someone's got to be making some outrageous comments right now.
I get crazy comments on that. And then the China rally today. So many shorts just like crying on Stock Twits today. It was great.
Oh, I bet.
You know what? Here's the thing. Okay. I always talk about
we're going
China.
Into it. Here we go.
Well, just real quick. This is kind of a side note. I always talk about China stocks, and I'm still a bull in the China shop, so to speak. But I don't really recommend playing options on these because big institutions can play the U.S. Version of the stock and then go and play the Hong Kong version of the stock, and they can really kill your options by doing that because the U.S. and the Hong Kong stocks, they usually follow each other. So then once you start buying calls and the big institutions pick up that there's a lot of call buying, so then they start selling the calls so they want to keep the stock price down. So then all of a sudden they can go into Hong Kong and sell the crap out of the stock and then bring the stock back down tomorrow. I mean, it's so easily manipulated that, I think you just buy these stocks and you sit and you hold your nose and you wait because eventually value will matter. Eventually those things will play out and these stocks will go higher, but to do it in options is really dangerous, I think.
Amen. 100% agree. If you're buying long-term for an investment, you got to ride the ups and downs, and eventually you are going to end up on the right side of the bubble if you did your research and you have good, sound reason for why you're doing what you're doing.
Yeah.
100%.
Yeah, but then just the options on this, I think they're so easy for them to kill your options.
There has been so many people that have started stock trading and they jumped right into options. They lost a lot of money. They went back in. They saw, this person's making money over here, and I saw this over here on Wall Street Bets, and it's like, you're losing money right and left, and it's because you're doing options instead of stocks, man.
Yep.
And options, you can make money. I've done some option calls before. You can make money, but it's. You can make money just as easily and safer with stocks than you can with options.
Yeah. The downturn, the COVID downturn was ripe for puts. That was a perfect environment for it. You just have to find the right environment.
And they called on the other side.
Yeah. Yeah, Amazon calls were a no-brainer.
Right.
Everybody's going to be stuck at home.
The oil call that I made last year, that was a no-brainer. Oil went negative. Come on.
Yeah. Who's
not going to do an option call on oil?
Right.
10 times your money. I'm going to talk about that for years. All right. Anyways, let's tell everybody the rules since we've already got started. Right. Rules. Everybody knows rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not discuss it. We save the live discussion for the show so you guys can hear our actual back and forth. We hope to keep it more natural, flowing that way. Brandon and I have known each other for quite some time, and because of that, I'm going to let him go first. He looks like he wants to go first. I feel the energy of I want to go first. We're going to let you go first.
Yeah, okay. So I was a bull on Alibaba when it was over $200, right? Do you think I became a bear on Alibaba on Friday when it was at $155? No. Because it was an investment for me, right? So I've been buying and buying and buying as these stocks have dropped and dropped and dropped even more. And I'm totally fine with where the price is today. I was fine with where it was Friday. I was actually happy with it. So I'm still a bull in the China shop. And you saw today, China stocks outperformed the overall market. And that's because some risks are waning. Not all of them. You still have the regulatory risks. The Chinese government, they don't think in election cycles like our government does, right? Because they don't have election cycles. They think in terms of decades. And then they have like 30-year plans. So these regulatory issues, they're going to persist. But if you look at JD.com's earnings, second quarter revenue rose more than 26% on the year. The company added a record 32 million users in the period. Total user base is now above 531 million. EPS beat expectations. 41 cents a share was the expectation. They came in at 45 cents a share. E-commerce platform Pinduoduo, I'm probably pronouncing that wrong, but they recorded a surprise profit beating expectations. The expectations were a loss of 15 cents per share, and they came in with a EPS of positive 44 cents a share. Now, total revenue, actually, this was a miss of about 13%, but that huge surprise in EPS really drove the stock. I think it was about 20% today that it went up. So you could see, despite these regulatory issues, Alibaba, we went over their earnings. A couple episodes, we did the same thing with Baidu. They're still outperforming, and they're still growing, and they're still doing really well. These regulatory issues have had a very small, negligible impact so far. I expect that's going to continue. And I do, we just had some overreactions because we're at the beginning of this. I think people are going to get over it. Cathie Wood sold a majority of her holdings in Alibaba actually on Friday when it was near 3-year lows. But on the other end of that, when it was at about 155.50, an unknown large institution purchased about $611 million worth $1 million worth of common shares of the e-commerce behemoth known as Alibaba. So you still see a lot of big money getting behind Alibaba. Go ahead, Dave.
Hey, so first of all, Cathie Wood and ARK Innovation has been flat. All right, so they had a big jump up running through the COVID rally like everybody else. You could have thrown $1 at anything and made money during that rally.
I know.
She made a lot of money during that time. She had a big run up. She's been flat ever since. I have yet to see her come up with new innovation as far as her push. I mean, now, don't get me wrong. Everybody goes through periods of flat. But when you were like, hey, look how great we are for a while there. I mean,
yeah,
if you don't maintain it, that looks bad. That goes negative. You know what I mean? You got to maintain that if you're going to cheer that on. Now, if you're going to say, hey, we're in unexpected growth and this is great, but we see some headwinds coming up, blah, 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 that's different. Anyways, also, China is always going to slap the hand of its companies and kind of discipline its children, if you will, if you want to use that analogy. But again, they don't want to also see Baba fail and disappear either. They have a long-term view. They understand Baba needs to be around.
Yeah.
So they're not going to make the company go bankrupt. They're just they're gonna say, hey, we're the boss here, not you.
Yeah. Now, like Cathie Wood, to me, she's all over the place. And for me, it's hard to tell if her success was based on COVID luck or if it was based on skill. And that's why I'm kind of staying away from the ARK Innovation. 10 years from now, we'll figure it out. If she's still around in 10 years, then great. But I can tell you right now, she's been all over the place. Just weeks ago, she sold 1 million shares of JD.com, and today she bought back into it. So, there's not much consistency there.
Yeah, it sounds like she's feeling the pressure from people to continue the growth that she had, and you just can't. You can't have that same growth we had in 2020. I mean, that was outrageous.
Yeah.
Outrageous. You can't see those returns year in, year out.
It's hard
on stock investing.
Not going to reproduce it, no. But more China risks that are waning here, though. Alibaba, they actually increased their buyback program. They raised the repurchase program to $15 billion from $10 billion through 2022. This is the largest buyback program in the tech giant's history. One of the things that people were worried about with the new regulations was, will these internet stocks, these large companies, have to get regulatory approval before they buy back shares. Clearly, Alibaba didn't have a problem with this. The other thing that they had, that was kind of vague, will they have a problem with selling bonds? Well, Baidu just did this a week ago. And by the way, it's a great business plan right now. While yields are this low, it is a great idea to sell bonds. Apple did it, and now Baidu's doing it. But these were two concerns over recent regulations. They're now, at least for the short term, they're wiped away. So you see Chinese stocks moving up.
Yeah, I mean, we have government bonds, municipal bonds, corporate bonds. I mean, everybody's going to start raising. Is Kanye West going to come out with his own bond? Is that what's happening?
He might.
I mean, seriously, where do we stop with these bonds? And the yields aren't that great. I mean, some are. Like if you're taking a bond out of Greece or Cyprus, you might get a good yield, but
if you're a corporation, you're taking on this debt, you're selling the debt, actually, is what you're doing, and you're doing it for a very, very good price for yourself. You're actually going to wind up making money on this because inflation is so much higher than the yield that people are going to get. So
that's true.
It's a great idea to sell bonds at this point. Buying bonds, not so much, but to sell them, yeah, it's perfect. Makes great businesses.
Kanye. Sell your bond. You heard it from chinchillapickin.com.
Another thing that happened last week, Baidu had their annual conference. It was a Baidu World 2021. This was August 18th. They are expanding their robo-taxi service to 40 cities inside China. This was interesting to me to watch because cars are actually monitored and can be taken over by drivers via cloud software. So you have all these drivers sitting in one room like they're playing a video game. And they're watching these cars, and they have their own wheels and gas pedals and brakes and everything like that. And then if the car starts to malfunction, they need to take over. They can drive from this room.
That is cool. That is really, really cool.
Yeah. I was wondering what your thoughts. Now, see, me.
That reminds me of so many things come to my mind when I hear that. That is what I want to see in the future. That's what I want us to get to. I don't think the technology currently is as safe as I would like it, or as an exact as I would like it, but that is where I would like us to get to.
Yeah. It kind of raises a question, though, like if you break a traffic law, then how is that enforceable? I guess they can get your driver ID number or something. I'm sure there's ways to do it.
Yeah, there's got to be a way to track that, but my only concern, again, is the privacy concerns of these autonomous vehicles. Are there cameras inside the vehicles, or are they... can they lock you in and not let you out if you can't pay, if something goes wrong with your payment? What are the safeguards there to keep people safe?
Yeah, and I think that's you're kind of hitting on an actual legit concern that the Chinese government does have, and I do think it's a legitimate concern about data. I don't blame them for not wanting Alibaba or Baidu or Didi or any of these other companies to start moving their data that they have to other countries. I don't blame them at all. So, I mean, do I like the regulations? Not really, but I understand them at least.
Right? Yeah. I mean, yeah, exactly. I mean, the U.S., we just give our data to anybody, Nigerian princes and everything. So,
yeah.
Yeah, and I believe the autonomous vehicle is the future of where we're going. And if you don't mind, I am going to go into what I was leading into earlier before when we were talking.
Sure.
Was Waymo? Waymo, guys. This is a Google self-driving taxi. It's we now have it live in the United States. So Google is no longer testing this in Phoenix, right? Phoenix has been the testing site for this for over a year. I think they had a couple other sites, one in Texas and somewhere else, where they were doing road tests and everything, with drivers in the car and all that kind of stuff, and then letting them go slowly on certain areas. So it is going live. You can have the Waymo app, and you could get a Waymo taxi with no driver whatsoever. Just a car rolls up, you get in, and it takes you somewhere, but only in San Francisco right now. But it's in America, guys. In the United States, we have autonomous driving taxis an empty car that will come up, pick you up, take you wherever you want to go. What they're using, Brandon, and I wanted to mention this because we all looking at everything from an investor standpoint, right?
Yeah.
So they're using their own patented honeycomb LiDAR system, right? So they're using LiDAR. They do have some cameras and other things in combination with the LiDAR, but they have their own system, the honeycomb LiDAR system. I'm sure they bought some patents from other LiDAR companies on the way up that they're using. They're not using the same camera system Tesla is using on their autonomous vehicles. Tesla is not using the LiDAR. They're using radar and cameras alone. So they're using a different set of systems. So we're going to find out which system is actually better, if you will, because Elon Musk is intent on having a fleet of autonomous vehicles over Southern California and Texas here in the next couple of years, similar to what Baidu and Didi are doing in China. He expects Tesla to be doing that in the United States here soon. Whether or not he partners with Uber or Lyft or just does his own, I think it'd be smarter for him to do his own or buy Uber or Lyft. That would be the best way to go. That way he can run it that way. But I'm excited for this. I'm excited for Google and Waymo. I think Google is just the umbrella corporation. With how much information they have on everybody, it's ridiculous. Yeah, Google could tell you, Brandon, probably everything about your life. Your Google Assistant in Google is, writing down everything you do.
Yeah.
How's your Google Assistant today? That is, instead of FBI person, it's Google Assistant. But them doing this, it's a good start for America. We need to get into this, and we need to, have this. We're also going to have a combination of still the people who love to drive their vehicles no matter what. I think 30 years from now you're still going to see a 69 Stingray on the road driving, because Americans, we still love to have that feeling of taking the car and going for a spin. But this is also a good starting point and turning point in that evolution that we all saw coming, but now it's just coming in our lifetimes.
Yeah. Well, we're always about, people don't realize this here, but we're always about 5 years behind Asia, it seems like. And some of these other things,
I don't think we are always.
I think, like, when I was, for example, in South Korea, I was streaming TV in 2008. And I was standing on heated hardwood floors. So, and I thought that was so cool.
We had heated hardwood floors. And you could stream some stuff, but it was very, very little.
It was everything.
I don't think it's that we lack the technology, Brandon. I think it's just we're comfortable where we're at.
Well,
and we're slow movers.
That's possible.
We're slow adapters.
But we go back to a little bit of what Baidu announced during their conference. So,
hey, hold on. Here's my questions from an investment standpoint, because Google's using LiDAR, Tesla's not using LiDAR. What's Baidu using? Do you know? I
don't know. I know they're using their own Apollo software for it, but I don't know if
their own patented software as well. Right?
They have their own patented software. I don't know as far as LiDAR goes if they're using another.
Here's an honest question, and I'm not trying to pick at a scab here with Bob, but honest question is, with all these companies having their own software or not using LiDAR, MVIS doesn't have much hope of actually joining up with a car company.
Probably not. I don't know. Tesla's not going to do it. That was one of the hopes that Tesla would use microvision.
To me, I look at that as like microvision has to go a different aspect, a different way in order to commercialize their product, which is a great product. But these companies are using their own system. I don't see one of them buying them up, or, so I look at this as like pick and choose, guys, on these LiDAR systems. So if you're looking at a company for its LiDAR or radar use, first see and check, because these major companies right now, like Google and Waymo and Tesla and Baidu and Didi, they all have their own. They don't need to buy up any other ones right now. Think about that before investing.
I agree. And it's also tough when you have an up-and-coming company in a new industry. It's kind of tough to predict where that's going to go. You don't have any patterns to look at that are predictable, and you don't have any fundamentals that are predictable yet either.
Exactly.
But as far as us being 5 years behind, let's look at some of the things that Baidu announced, some of the other things here. Now, they did announce a new smart speaker. Their smart speakers are number one in China. They're similar to Alexa, so we kind of have that going for us in the United States. They introduced a new smart TV that can make video calls. They introduced a new smart headphones. They're noise canceling and they can transcribe conversations.
You know, Google has headphones you can put in your ear that could translate. You can speak French, I can speak English, and we can talk to each other.
That's cool. Well, they introduced a smart pen.
Google had that almost 10 years ago. Oh, go America!
They introduced a smart pen that can translate foreign languages, so you just scan the foreign language on paper or on your computer, and it will translate it. This will be big with Chinese travelers, which are huge. They're a huge contributor to global tourism.
Yes.
They showed off the 3D AI coaching software that helped the gold medal winning Chinese diving team. Now that's not you can't really commercialize that very much. You might be able to do it to help with golf swings or baseball swings and stuff like that, but I just think it's cool.
AI is everywhere. People have no idea. So I go 1 minute rant. Give me 60 seconds. People have no idea how much biopharma companies come up with medical innovations using AI. They use it and they abuse it and they use it and they have those computers running 24/7.
Yep.
And that's how come we're able to get innovations faster. Is because we're doing the calculations, we're doing the tests in computers via AI doing it. And then we just come back and go, hey, look what they did overnight.
Yeah, well, they also, I mean, they've got they announced some things with software, but I didn't quite understand that part. So as far as healthcare goes, they announced some healthcare software, but I didn't quite understand that part. So I'd have to go back and look into that. But
are you not a softwareologist?
No. Well, I don't know the Chinese language very well. And so, subtitles don't always work exactly the way that you want them to. And this was all in Chinese. So, but they showed off what they did is they set up a water resource saving AI software technology. They set this up in a small Chinese city of about 8 million people, and this monitored the usage of water. This can actually lower the water pressure during times when people aren't using so much water, and this reduces energy usage and conserves water. So they have this whole system, like they call it the Baidu brain, and cities can implement this to do things like making traffic lights more efficient. They can alert public officials and volunteers to safety hazards and even litter. This is huge. Like, a city can just invest in this Baidu brain, and then there's kind of this barrier to entry because once you're in this system, you don't really want to get out of it, because you have so many things working for you. And so there's a lot of government contracts coming to Baidu.
So it's like the Apple system. Once you're into the Apple system with the iMacs and iPhones, and you can't get out because all your stuff's in there.
Well, that's true. That's true, but there's so many benefits to it as well. And we can also talk about the fact that Baidu, it's a search engine, just like Google is, right? They still get 80% of their revenue from their search engine, and this is going to be huge. There's going to be a lot of advertising dollars coming to them when the Beijing Winter Olympics come in January.
And yeah. And I like this, but I like, and again, I'm all for this innovation and this growth in AI and autonomous vehicles and all that, and I'm for it all, and I want it all to happen. I want the competition, though. I don't want a Baidu City. I want competition. All right.
Well,
because when you have Baidu City, you have iRobot, okay, with Will Smith, and then that just doesn't end well.
Well, so and then we
don't want one corporation controlling every aspect of a city.
You don't, and you don't want that. Just like I wish we had more competition with electric and water resources here in the United States. And one of the reasons why we're still running on the same electric grid that we did in 1940 is that there's no innovation in it because these companies come in and they just own the town and they don't have to do anything else.
there are towns in Texas that have more than one electric company, and their rates are low.
That's good. But we still need more. We need more innovation in that sector. We need more incentive to be innovative in that sector.
And so that's the whole thing. There's no incentive to be innovative because what they're doing works and they don't need to change.
We shouldn't have the problem of electric fires in 2021. Electrical fires should no longer be a thing, in my opinion. We could go beyond that. I mean, I don't know how to do it. I'm not that intelligent, but somebody could do it.
Ologist.
But nobody's put any significant resources into it because they don't have to make a profit.
That's true. That's true. So what you calling this? Are you calling Baidu?
Oh yeah, I'm still saying buy it. I've been in it for a while. Unfortunately, I wish I would have bought. I wish I would have started. If I was lucky enough to start a position today or even Friday, I would be so happy. But at least I was able to buy more.
I'm pulling up Baidu right now. We're gonna see what this price is. What do you got it as?
155.75 is up 8.63%. If you get a nice pullback tomorrow, you buy. Really, in this situation right now, you've got so many unknowns with China. I think you just buy it and you hold your nose and you wait.
I mean, you're down from the 52-week high, so.
Oh yeah, definitely. I mean, you're like, it's actually up 25.74% for the year, which is surprising because Alibaba, for example, is down 36.83% for the year. But you talk about your 5% a lot. The 5% a week. I like to look for stocks that I could potentially double my money with, right? Because we were talking about this before the show. If you start with $1,000, if you do the 5% thing a week, then at the end of the year, you've more than doubled your money. But like if you're looking for investments and you try to double your money too, listen, all you have to do is double your money 10 times with $1,000 and you make $1 million. It sounds easier than maybe what it is, but like once you get used to it, you can do it. It's totally doable. In somebody's lifetime, you could totally double your money 10 times.
Yeah, no, I mean like.
But I think you can double your money with Baidu.
A week, you do 8 times your money every year.
Yeah, I think you could double your money with Baidu. I think you could double your money with GE. I think you could double your money with Alibaba, Tencent.
GE.
Yeah. General Electric. Right. I mean, they're on the upswing.
No, I mean we had a whole conversation about that. So There you go. There you go. You like GE, all right.
I love GE.
I
love the way that it's trading. If we hit a new recession, a financial recession, they're going to have some trouble. But, it's looking good there, in my opinion.
Nice.
Now, let me ask you this question real quick. This is a bit of a different subject, but
hit me.
Usually, the financials rise at the end of a cycle. That comes at the tail end of a bull market cycle is when the financials go up. And this year has been a pretty good year for the financials despite the fact that interest rates have stayed pretty low. So do you think that we're at the end of a bull market? Do you think that, because I have the opinion in my mind, I don't think the previous bull market, that the previous market cycle actually ended. I think the COVID pandemic just interrupted it, and then we continued on the same trajectory. So are we at the end of the cycle, do you think?
So, I agree with you that the COVID pandemic interrupted a bull market cycle. However, I believe we've made some of the wrong decisions to get where we're at, and we could cause ourselves to end it right now.
Yeah.
We could also pull ourselves out with good GDP numbers, strong economic growth, and people going back to work. And that could pull us back out of this and put us back into a bull cycle. So I can't say which way we're going to go until I see more numbers come in the September and October, specifically October.
It's hard to tell.
I mean, because in October you're going to hear the September numbers. You know what I mean?
Yeah.
So I want to see what the September numbers are. That's what I'm waiting for.
Yeah. I mean, it's usually like you start with transportation, then technology rises, then consumer discretionary, and so on. And
the financials did good because of what happened in 2020. We covered this multiple
yeah,
times,
but
they had a great year because of that. And I called at the beginning of this year. I said, look, they're gonna plateau off. They're not going to continue at reporting these same year-to-year growth and all this other growth. They're not going to continue reporting, and that's exactly what they did. And so yes, they have good numbers right now because there are so many upswings, and they're making money off the Wall Street bet guys. And the Wall Street bet guys don't even understand it, that these guys, the financials, are making money off them.
yeah.
So
The rich dad, poor dad guy.
Everything's thrown off right now. Everything's thrown off.
Yeah, the rich dad, poor guy, the rich dad, poor dad, the author of those books. I was watching a video of him yesterday, and he was talking about people don't understand that taxes and inflation make the rich richer, and they make the poor poorer. It's actually true, and people don't realize it if you actually study what's happening, especially with inflation. But to me, and kind of where I'm going with this, all of the intervention that we've done into the economy, whether you believe it's necessary or unnecessary or whatever, it has made this market cycle almost unrecognizable from other market cycles. And it's very hard to judge exactly where we're at. So I'm taking the approach, with trades, you can look at momentum, right? But with investments, I'm taking the approach of picking singular individual stocks that I think are undervalued because there's a few of them. We mentioned a few of them. I think Baidu and Alibaba and Tencent and Delta Airlines. Some of the airlines right now have gone undervalued. I think that General Electric is also undervalued. So I'm making some individual value plays. And I'm kind of looking at the macroeconomic situation and I'm saying, you know what, I can't decipher exactly what's going on here, but if I become more micro in my views and pick these companies, I should outperform over time, if I'm right, and if I do well with that.
And for you, Brandon, I say yes, go ahead with that, because when you focus on the microeconomic news and you stick to that and you stick to what you know you do well.
Yeah.
Right? And for me, when I focus on the macroeconomic and I talk about events and emotions and the roller coasters of the market and how people are feeling right now, I do well.
Yeah, that's why you trade oil well.
Yeah, exactly, right? And so we need, and the message I want to get out real quick in 60 seconds or less to people right now is, stick to what you do. Don't try to get the extra thick frappuccino with the 2 drops of this and extra shot of that. Go order your black coffee and stick to it, because you know what? It works. You can make money consistently by doing what you do over and over and over again and repeating it, because it works. If it ain't broke, don't fix it, man. Don't try to go extra and try to make 100% return this week when you don't have to.
Yeah, I agree. One of the things that popped up, Robinhood Markets, they announced their earnings. They reported a quarterly loss of $2.16 per share. This missed expectations by 1,340%. They were expected to be positive 15 cents per share. And they blamed this on seasonal trading, which I don't think I've ever heard that excuse in my life.
We've never had a company that this is the only way that they make money, and so this is the first time we're hearing it in a company's earnings as to why they missed the seasonal trading. You're going to have seasonal trading when you boosted your company up based off the COVID 2020 pandemic and people making money on the comeback, which was easy to make.
Yeah.
Like I've always said, you could throw a buck in anything and make money. It was so easy, a caveman could do it, and yet you come back around 2021, things are getting back to a more normal state of picking and choosing winners and losers, and people don't make money, so they pull their money out. There's less trading because now they're taking time. So therefore now Robinhood had its 1 year of good news, and now all of a sudden it's back to normal.
Yeah, actually, it's what's funny is, and so ironic is that I see this report and it makes me not want to be a Robinhood customer anymore. It makes me think about actually switching everything into Fidelity or TD Ameritrade, because
for options, Fidelity costs a lot for options, man, unless you're working with a good amount of money.
Yeah, so maybe just And that's probably why Robinhood makes a large portion of their money off of options, is because they're easy to do on Robinhood, and
it's easy and free.
Commission free at least. But it is kind of a concerning earnings report to see as a Robinhood customer that, how safe exactly is my money in there? I don't know.
And that's a good question, man. That's a good question. People should be looking for other alternatives always, and making companies work for their money.
Yeah.
Work for me. Show me how you're going to be better. So where we at, man? Where we at? I haven't even been keeping track.
36 minutes.
Perfect.
Yeah.
Nice. Because you know what? I got a quick little piece here, and it's going to end with American Express. All right? So let me go over let me give you some information, Brandon, if you will. Sit back and listen to this story.
Okay. Light me a cigarette, maybe?
On CNBC, they had a story about Ramp. R-A-M-P. That was actually named the company, not a ticker symbol, by the way. Ramp. A corporate card startup, right? Its valuation has more than doubled in 5 months. They raised $300 million in a Series C round at a $3.9 billion valuation, right? Yeah. $3.9 billion valuation. They were just at $1.2 billion valuation 5 months ago. How they're doing is they claim to save their average client 3.3% a year in card savings and monthly expenses. They also claim to get more than 1/3 of its clients from American Express. What they're saying is they have an all-in-one platform for small businesses that they could come to, get their financial reports from, financial health, credit card situation worked out with. And they're focused on businesses and small businesses to medium-sized businesses. This is where their focus is. They're saying they're taking all these people away from American Express, right? I've heard these valuations before, like this jump ups on other companies before in the past. One of them I talked about on the show, WeWork, right? Does that ring a bell? WeWork?
Yes, it does.
Anybody see the Hulu special on that? All right. So you got a question when a company you've never heard of all of a sudden, just 3 times their valuation in 5 months. Like, okay, what's going on here? Let's learn more about this, right?
Mm-hmm.
Well, just like WeWork, Ramp has some big backers as well. Goldman Sachs is one of the people that bought into their Series C. They gave them $150 million on recently. That's what Goldman Sachs alone gave them. There are multiple other companies you would know that are backing this company, Ramp. So my question is, should American Express start to worry, right? American Express is down from its 52-week high. Well, actually, its all-time highs of 180. It's down to 161. They're still way up. Look at their chart year over year.
Yeah, they are.
They're still way up.
And the airlines aren't.
Yeah.
I mean...
Yeah, American Express, the chart goes from bottom left to top right. Perfect looking chart. Couldn't ask for a better chart. However, they are flat the past month or two, right?
Yeah.
So is it leading up to these big announcements of Ramp? J.D. Power still ranks American Express the number one in customer satisfaction in all cards in the United States.
They're huge with travelers too. So the return of travel, that's why probably they were really a reopening play for a financial company because of the return to travel. There's so many perks that you get with American Express to fly on an airplane. You get frequent flyer mileage, all that stuff. They've tied all that into their programs. So that's why I think, I actually looked at American Express as a reopening to travel before I went with Delta. Because I thought Delta was given to me at a better deal. Simply because American Express has had such a run, but...
Well, I mean, because American Express has had such a good run, because now they're feeling competition from a startup that claims they're getting over 30% of their clients from American Express, is this a time to be concerned and maybe, look at maybe do some shorts?
That's a tough one for me because I think a lot of people look at American Express as a reopening trade, and it seems like we're starting...
Do you think the American Express flattened out because of Delta?
I do think that.
After we get over Delta, it will jump back up.
There might be a pump on that. Yeah, I would, like I said, I would stick with the airlines and with companies like Las Vegas Sands and Madison Square Garden, which just recently had a huge jump, I think, on Monday. So maybe wait for a pullback on those, but I would actually go with the actual tourist destinations and travel companies rather than American Express right now. Just because I think if they do get a bump, they've had such a good run, they'll probably pull back again.
All right, so this story about this startup ramp doesn't sway you one way or another on AXP.
I need to see more about their business plan and the benefits of holding ramp and what their corporate governance is and all of that stuff.
Well, good luck. They're still a private company, man.
Yeah, I know, but if they're raising all these valuations, there's a good chance that they're going to IPO at some point.
Yeah, and that would be one of the reasons why Goldman would put money behind them like that.
Yeah. So we'll probably see some SEC filings if we haven't already. I haven't actually looked in because you're mentioning this to me today. I've never heard of the company before, so.
Right. This is. I mean, people. I don't know if everybody here actually believes that we don't actually discuss these things beforehand. That we really just say, "Hey, I'm going to mention Ramp and American Express," and any questions. But it's something to think about. I always like leaving people with some information, and like you got to understand how I find these stocks and how I find stuff is. Okay, I see this story, I look into it, I start digging, I do a little bit of research, and if nothing's there really quickly, then I move on.
Yeah.
But if there is something there, then I keep digging, I keep doing more research, and I find that golden nugget.
And if you've inspired people to do the same, like I'm going to do after the show, I'm going to look into Ramp, and I hope that a lot of our other listeners do the same thing and make their own decisions, and you've done your job, Right. That's the way I think about it. Like, I want people to hear our show and then think, well, I've never thought about it that way. Maybe I, should look into what they're saying.
Yep, exactly. Because, like we say at the beginning and at the end of every show, we want everyone to make money, man. We want
Except for the Money Vikings
to be prosperous. It doesn't matter what political party, what person you are. We want you to make it. We want you to realize your financial success.
Yes.
So. That's all I got. I don't have any final thoughts because I'm not going to be able to make a call on American Express. I'm excited about Google and Waymo going live in San Francisco, and that anyone can show up and get a vehicle pull up next to you with no driver. That's so weird, but yeah, I can't wait for it to happen here. Other than that, I don't have any calls, guys. I made a call on Instagram about Blink. Blink is still on its way back up. I know a few people, friends of mine, that have bought Blink on when it was going back down. We didn't buy it at the bottom, you never call the bottom, but we bought it on its way back down. I've already sold. A friend of mine already sold. My daughter even made a trade on it and sold and made money. So it's good. It's still going back up though. So I'll probably post an update to Instagram soon about when's the right time to sell on that. But think for yourselves, guys. If you already made a couple percentage, you could get out if you want to, or you could keep it and hold it. So
yeah, and here's my final thoughts. I've given a lot of opinions on Chinese stocks. If you buy one, you're likely buying the whole group right now because it kind of move in unison. So I don't really want you to die on the red hill. Don't go too overweight here, but I do want you in these markets. I do want you in these stocks. They're great companies. And they've just been beat down because of regulations that really have not affected their bottom line in any meaningful way whatsoever. But if you do go into China, there's a couple of things to look out for and to watch for. Because if Ant Financial announces their IPO date, these things are going to take off. So you get an IPO date for Ant Financial. And then if you get Didi, if their app gets back on to people's cell phones and back on the app stores, that's great. They're already working with they brought in a third-party company to manage their data. So that should make the Chinese government and Chinese regulators happy. So I would expect that. I expect those two things. I kind of see Ant Financial to Alibaba. That's what the Air Max was to Boeing. Everybody was waiting. You knew it was coming. You knew the Max was going to get back into the air, And that was your big catalyst for buying Boeing last year. This is your catalyst for buying Alibaba. Once they get Ant Financial's IPO set, then I think you're going to get a takeoff.
There you go. I like it. Brandon wants more bowls in that China shop.
Yes, I do.
All right, guys. As always, we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.